Hello and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin and I am here with my father, Carl Swenlin, and we are going to get you the charts that you need to see moving into this week. We will be taking your symbol requests and your questions. Just put those in the Q&A box and we will be able to get right to them. The chat room is for you to talk amongst yourselves. I do have a moderator in there, and Fred has just welcomed everyone to the room. So go check out the chat room and make some new friends. All right, without further ado, Dad, I'm going to pass it to you. What is going on in the market?
Okay. First thing I want to look at is what's going on with the Dow. And let me refresh this. Okay, Amgen, Boeing are at the top, and J&J, and then at the bottom is Apple. And why don't we get right to that? Here's the Apple chart, up to date, and
pretty ugly. Pretty
ugly, yes. It's a 10% decline from the all-time high. This is really astounding, really, when I look at it, to see the steady up and finally it breaks. But let's look at a weekly. I always like to look at the weekly, right? So that was an all-time high, and breaking out of this cluster in here, correcting back now. Don't know how far it's going to go, but there it is. Looking at the rest of the Magnificent Seven, Amazon still holding its breakout. Incidentally, Amazon is just about half of what Apple's market cap. So Apple has twice the impact on the S&P 500 as Amazon. Amazon has pulled back to this rising trend line, and the 50-day exponential moving average. And I'm sorry, it did that and then it broke out, yes. And we've got a PMO crossover. Google sitting here with a potential island, a reversal potential, we'll see. But I think that the techs are going to be doing not so well for the next 3 months. And so this might gap back across. I wouldn't bet on that, but I'm just saying something to be aware of in your planning. Meta platforms, still nice, steady, rising trend. And right now correcting back to the trend line. Microsoft, we've got a saucer with a handle forming on that. So this is a consolidation. Let me just go put another year on here. See it better. There you go. So we've got a nice, well, maybe even a cup. And right now, this is going to be digesting this advance right here. Netflix. I've drawn on these swoosh marks here to just illustrate when it gets too steep, it corrects. And that's kind of parabolic, and we can expect some kind of correction. In a short term, is going to be a short-term version of a correction. NVIDIA, I guess this is more like a potential continent reversal. But there's a lot of emphasis on AI and NVIDIA being a leader in that area, presumably. But we still don't really have any specifics about AI, so that can evaporate very quickly. Because if you remember, for a long time, we were worried about how the world was going to end because of AI. And then all of a sudden, AI is great and tech stocks love it. Okay. Okay, here's our extra. This is our plus in the Magnificent Seven plus list. Tesla not having a good day and basically backing off. Basically, we have a rounded top here is what I'd call it. And this would be a potential confirmation line right across about 240. And we would expect it to go below that. Okay, let's go to SPY. Okay, we're getting a little bounce day after Friday's bad day. And we're up a little over 0.5% there. Okay, bias assessment on the S&P 500. Here we have the Silver Cross Index, which is the percent of stocks in the S&P 500 that are above, that have the 20 above the 50 EMA. Call that a Silver Cross. Named in honor of the Golden Cross, which is the 50 moving above the 200 moving average. Now, this is something that's been around forever, but so when we came up with the Golden Cross Index, we made it a shorter term version called a Silver Cross. And this is the one that we pay most attention to because it moves faster. And it's at 79% stocks on a Silver Cross, but it's in an overbought area, and basically it pumps up and down between overbought and underbought, or I should say oversold. And Golden Cross Index, percent of stocks with the 50 above the 200 EMA, and that's at, let's see, that's at 67. Now, let's say, what's the potential for this? It's already topped and crossed the signal line. So the 20, stocks above the 20 is at 42, and the stocks above the 50 is at 57. So 57 is the controlling element at this point. So that is, there's a potential for the Silver Cross to go down to 57%. And basically, the potential's there, and that's where it will go unless something changes. With the Golden Cross Index, we have 57 and 66. Well, the Golden Cross is at 67, and the controlling element is the stocks above the 200 at 66. So we have no potential there for it to go anywhere. And if we look at the, let me look at the thumbnail on that. See that it's kind of moving sideways in a very short term. But right now, there's no hint that it's going to go lower. And one final look at indicators. Here are our primary short term, which is the Swenlin trading oscillator for breadth and for volume. In the short term, it's oversold based on the movement in the last 4 months or so. But it's potentially could go much lower. But during this bull market phase, that's as low as it got. So right now we're potentially as oversold as it's going to get. But if you look at the intermediate term indicators, and this is the intermediate term, breadth momentum and volume momentum indicators. And you can see they topped just a little ahead of price, and they're headed downward right now. And we would expect them to get down in this area. But see, here's the bull market potential, and if we enter a bear market phase, this is more likely the kind of low we will get before this decline is over. Looking at the four, we have the dollar, US dollar, broke down on Friday, but it's clawing its way back up. With that happening, we would expect gold to be down today, and it is. See, that's at 43, and this is at 14. So gold is weaker than the dollar is strong. With all things being equal, the gold should go down the same percentage as the dollar goes up. But of course, there are other factors involved. We keep track of the relative strength of gold versus versus the dollar, and this shows that the gold is weaker than it should be against the rising dollar.
And before you move on, could you look at dollar gold? Because I know that those two charts, GLD and dollar gold dollar gold looks a lot more bullish. It's just an interesting look.
Okay, but yeah, and we use dollar gold for the longer term just because we have a really deep data on that. But dollar gold is a theoretical. You can't trade it. So right. Just it's a continuous contract. But here, I don't know. Do you think this?
Well, we have a rising trend. We have, the PMO is still above its signal line. I mean, it's not particularly bullish, but it's certainly more bullish than GLD right now.
Not significantly, I would say. Mm-hmm. Just not significantly. That's why I decided to use both of them together. And
right.
We get this pretty much the same message. But for trades, I would use the trading instrument, this or IAU or another gold-based ETF. We have also silver, looks a lot like gold. Crude oil, trying to break out of this rising wedge, which is opposite of what we normally expect. So we're showing some short-term strength, we'll say, but keeping an eye on it. Let's look at a little further out. Okay. Versus this declining tops line, we've had the nice breakout and continuing rally. Bonds, this is the 20 plus bond ETF. And we've got really in a decline. It bounced on Friday and it's pulling back today, probably digesting all this. I'm not expecting anything. In the long term, bonds will go down based on my analysis of the longer term charts. Looking at yields, they ticked down on Friday because bonds were up, but the trend on yields is still up. And I don't see how that will reverse significantly unless the Fed stops raising interest rates. Today, we've got the 10-year Treasury yield, and it was down significantly on Friday, but it's bouncing up again today. We have a saucer formation, and we may have some churning around for a couple of weeks and maybe a month or so before it continues higher. And I didn't forget it today. Bitcoin, it's down. We've got a rising wedge formation in this one. This is a 6-month chart, and moving down in that rising wedge, and we'll expect it normally to break down from that. Let's go out to a long-term chart. This is showing where all these support and resistance lines are coming from. And major one here, it got above that, but it's creeping back. We have another significant resistance level here. So it's in a rising trend, but then there's the rising wedge, which should turn it back. And what did I miss?
I think you got them all. We did get a question about going over interest rates and the fact that TNX is reaching resistance levels. But just to wrap up what you were saying is that it still looks bullish, but there's a chance now because of that cup formation that we might see a little bit of churn. Am I correct?
Right. But I'm expecting them to go higher.
Overall, yes.
Yeah, overall, right at this point.
All right. Well, we answered that question. Let's see. Excluding futures, what is the best way to trade bonds on the downside? My answer would be there are plenty of ETFs out there that are inverses for bonds. So that is a way that you could play downside on bonds.
And you could short the ETFs.
Yes.
You could short that.
So those are ways you can do it without trading futures.
Right.
Okay. Let's see, Carl, why do you think tech will be down for the next 3 months?
Because we're still in a period of negative seasonality. And let's see, and it's had a nice, let's see, from May to now, it's had a nice rally. And I think with sentiment being really very bullish, I think we're going to see a downturn, just a correction at least. And I think that's going to last into September, maybe even to October. So that's, and tech stocks, with Apple leading the way, I think other tech stocks are going to follow, in spite of the new highs that we see on a lot of them. So that's what I'm thinking. Yeah, they've had a really nice run, and I think it's time to exhale for them. Not necessarily go into the toilet, but just have a bad couple of months.
And then just popped in here. Do you see a bottom yet for Apple?
No, I mean, it's here's the potential here. That line was drawn this morning across where the low was earlier today, and it's going to have to move lower. But let me just do that, because that coincides with this congestion right in here. We've got that top and these bottoms. So maybe that is a potential for a bounce here. But I don't know. I don't know why Apple is suffering this badly, but obviously it was the earnings report that started this, and but that I don't know what the bottom is going to be yet. We have to see see where it's potential to bounce. Okay. All
right. I think the rest are symbol requests, and then a question came in, but I'm going to answer that shortly.
Okay.
All right. So let us trade screens here. So what I'm going to do is go over the sectors. We'll look at a few industry groups, and then we'll talk about all of your symbol requests and see what's there that is interesting you, and we'll see how it looks moving forward. The question I got at the end here was whether we should short the QQQ. I'm going to answer that as I go through these sectors. Right now, if you look at the candle glance of all of the sectors, this is with the PMO and the stock charts technical rank on it. It gives you a really good sense of where the strength may or may not be. In general, I would have to say, when you look at this, every single PMO, with the exception of energy, are moving lower. We have PMO sell signals showing up. We have one on healthcare that looks like that's relatively new. The one area that was interesting to me this morning, though, is financials, because we are getting a little breakout from this declining trend. Now, I don't know that this is going to turn into something great or anything, but it's certainly a glimmer of bullishness out there, since there isn't a whole lot of it to be had. Like I said, energy is still clicking, but it is getting very overbought. So that's something that we need to consider. And then we were talking technology. If you look at the price charts on here, one of the more bearish looks, I think, is technology, because of this intermediate term rounded top going on here. We are sitting on support for technology, but that really, with Apple leading the way, seems to me to be the most vulnerable of all of the sectors out here. So I'm going to be talking a little bit more about that when I look at that chart in particular. But what I want to do is we're going to take a quick peek through these sectors. Let me get to... That's the industry summary. Let's just go this way. So let's look at energy, because it is clicking. And what we have here are under the hood charts. These are available to all of our members at DecisionPoint.com. You can have access to these charts. We update them every night, and it gives you what we call under the hood indicators. And you can see participation very clearly in what's going on. Right now, energy is clicking. I mean, you have 95, 96% above their 20-day EMAs, 100% have price above the 50, and 96% are above the 200-day EMA. There are only a few stocks out there that aren't showing a lot of strength. The rest of this sector is just clicking. The problem is very overbought. So where is there left to go but down? Looks like that we still are going to be able to hang a little bit longer with the prices rising. It's one of the bright spots right now in the market, and I think a lot of money is rotating toward energy. I think there's still some more upside to be had in this sector, but a lot of this is going to depend on crude oil. And we looked at that chart earlier. So it looks pretty good, but it's overbought. So we're getting ready to hit overhead resistance for energy. So that could be a problem. Here's financials. And like I said, this price action is what's got me a little bit, I won't say excited, but certainly giving me some bullish hope out there. You can see that this is a flag formation, and we're getting the breakout from that flag, which would imply another move that would take us above overhead resistance here. The big problem is going to be what happens in the broader market and whether financials can really toe the line here. But with energy clicking, despite the market moving down, maybe financials are going to be one of those areas. What I found really interesting this morning is I went into the industry summary and I was taking a look at the various industry groups to figure out why are financials moving higher. And if you click through here, there aren't a lot of positive places. Banks, a lot of people are talking about banks, but notice there's a PMO sell signal that's coming in on banks. Financial administration looks very bearish. Insurance brokers, okay. Here's where the strength is in insurance. You have full line insurance in a rising trend. You have life insurance in a strong, almost vertical rising trend. Property and casualty, flag formation, getting ready to break out. PMO looking a little bit sickly there, though, as it calms down. But in general, you can see, look at reinsurance, just going crazy. So where I'm seeing the strength in financials is not necessarily the banks. Mortgage finance looks pretty good. I noticed that on Friday. Consumer finance, again, PMO turning down, specialty finance. The strength is in insurance. So I've pulled out the insurance ETF as a possible add. I'm not adding to my portfolio. I'm just going to tell you right now, I'm not going to be on the buy side, probably on most of your simple requests either, but we're going to go with what's on the chart, technicals straight up, and that's what I'm looking at here. The issue I have is RSI is getting overbought, and we are getting close to this area of overhead resistance on this insurance ETF. But the PMO is turning up above its signal line. We call that a PMO surge. And stochastics are above 80, and certainly relative strength is improving against the S&P. So this does look like one of the few bright areas or pockets of strength that we're always looking for. I think insurance is one of those pockets of strength. But let's talk technology. We've talked about it a lot with Apple, but let's look under the hood at what's going on with technology. And as you can see, we have the PMO sell signal that came in here right at that all-time high, and we're continuing to see the decline. We have the OBV with declining tops, confirming the decline. We have a very, very high overbought Silver Cross Index, but it is now in decline. It had a bearish shift as it moved below its signal line. The Golden Cross Index is still rising for the moment. And I say for the moment because the limiting factor for the Golden Cross Index is how many stocks are above their 200-day EMA. In order to get a 50-day EMA above a 200-day EMA, you need price above the 200-day EMA, and you need it above the 50-day EMA if you're going to look for a rising 50-day as well. But in order to hold a golden cross, you're going to need price above the 200-day EMA, because as soon as it goes below, that's going to drag the 50-day EMA below the 200. So right now, with 80% above their 200, that really does not leave much room for the Golden Cross Index to continue higher. We should start to see that turning over soon. So ultimately, technology to me is the weakest of the sectors. And one of the things that I did do for DecisionPoint Diamonds subscribers was I found an inverse ETF for technology. Now you can short the XLK, you can do that. That's one way to do it. But if you're wanting to put on a hedge, this is leveraged by 3 times. So I just know that going in. This is a hedge. This is not an investment. This is a trade. This is to protect you if the market's going to continue lower. Today, the market's up, but technology, the last time I looked, was down. And I think technology is going to continue to suffer as long as Apple continues to suffer. So I think TECS, TECS, is an opportunity to maybe take advantage of some of the weakness that is going on in technology. I'm going to put on a log scale. I don't like to do that typically, but we need to get a better look at what's going on here. But you can see a rising trend here that's going on. First time we've seen a rising trend. We saw one back here, but at this point, I like the look of this on the bottom. I like it with the PMO rising and RSI in positive territory. Stochastics are above 80. So the technicals are on the side of the inverse ETF and certainly on a short for XLK. So the 2 things that I can go in with as far as today's trading room, when I look at the sectors and industry groups, technology the weakest, and financials looking a little bit interesting, in particular insurance. So that's your trader's tips for today's DecisionPoint trading room. And I think that's all I really need to cover as far as the sectors and industry groups, which leaves us a full half hour to cover the symbol requests. And we don't have too many. So if you want to throw a couple extras in there, feel free. I can't guarantee I'll get to all of them, but we have some time to start looking.
Okay, PAYC.
All right. Now this one, I think it was on earnings, had obviously a perilous day, brought price down. Let's see exactly how much from this high. That closing high to the close on that day was an almost 20% decline, and we're still seeing price moving lower. I don't see a really good stopping place at this point. You could maybe say that could be a support level, kind of covers these tops. So that might be an area at about 282 where you could see this decline maybe hold up for a little bit. But ultimately, there are some serious problems fundamentally and technically with Paycom. I wouldn't be looking at this to jump in to, take advantage of a possible bounce. I think that this stock is likely to head even lower. I would be looking at support closer to 261, 260 as where we're going to see price actually get to. I mean, the technicals look terrible. You could certainly short it, but again, I think there's room for it to go down another 10%, but I don't know if it's worth shorting it at this point when you've already lost this much on a short. So I'm not a fan of Payc.
That's a huge loss.
It is. And I don't see a rebound here anytime soon. Not with the technicals.
What's the weekly look like, just for fun?
Oh, yes, just for grins, as we say. You can see that huge decline, but this is where the support is. We looked at a possible support level right in here, but this is the support. I mean, there's a top here, this little top, these lows, both of these lows. That's where I'd be looking for price to move to.
Okay, HLX or long.
All right. My Diamonds member, Thomas, let me guess, is this a biotech? No. Wow, you surprised me, Thomas. Came in with an energy stock. This has a possibility of a reverse island, so that worries me a little bit. But PMO moving the right direction. Stochastics have turned up in positive territory. This is one of the things that you might want to pay attention to when you're fishing in an already strong group or sector, and that is comparing the stock to the industry group. You want to find leadership not only against the S&P, which pretty much all of the energy stocks are more than likely showing is relative strength against the S&P, but you want to look for those that have relative strength against the group. So that way you're getting something with, showing leadership not only within the sector, but within the group itself. This one's traveling in line with the group, which is just fine because the group is outperforming. But it tells me we might be able to find better stocks than this one. And I'm really nervous about the fact that with energy moving up the way it has, this one made that gap, but hasn't done much. And it leaves you really vulnerable to a gap down. So I'm not really a fan of this particular energy stock. I think there are probably better ones out there. Notice the RSI is completely overbought here. This one just begs for a pullback. And I think a pullback might be a little difficult on this one because of that gap up. So not a fan. Sorry, Thomas.
Gilead, GILD.
Healthcare is where I'd like to start seeing some action. There are a lot of opportunities in healthcare, but with the sector still not looking good, we have to be really careful there. PMO on the buy signal. PMO has just moved into positive territory. Stochastics rising. Certainly relative strength is improving this week for this group, biotechs, another group I'm watching very closely. And we've got a positive RSI. The problem we have here in price is that it's in a trading range. And certainly I know this is a biotech, so upside potential, if it can get past and out of that trading range, well, it's about 9.5%. But it needs to break out. And the last time it did fail on the breakout, and things were really lined up nicely for it on that one, and it didn't. I could see this one as a long, but like I said, first of all, I'm not adding to my exposure. So whenever I say adding, I'm just saying technically that's what can be going on. I'm not saying to add anything today. I really am not. But this one, I could see the potential with the breakout. We've got a breakout here. So it's trying for its second time. Hopefully it's not one of those cases where it has to be third time a charm. Maybe the second time is the charm. But I'd be really careful here. And I just feel like upside potential, if I'm going to go with a biotech, there are a lot of opportunities in biotechs where you're going to get a lot more upside potential than 9 or 10%. So while I think Gilead looks pretty good right now, I just think upside potential is kind of limited. This is the 5-minute candlestick chart. I need to bring this up because we are in a trading room, and I want to teach you to trade, not only what to pick out on a daily chart. A 5-minute candlestick is where you go when you know what you want to do with the stock. This is not where you go to kind of, well, do I want it? Do I not want it? No. The 5-minute candlestick, I want the stock, I need a buy point. And this chart is going to help you get the best buy point. What we want for a buy point is a 5-minute PMO crossover combined with a 5-minute RSI being in positive territory. So this was the last buy point, and it was on this candlestick at a close of 78.93. So if I could get it at 78.93, that's where I want to get it. Of course, not looking like we're going to get that today. PMO did turn over, and looking in the thumbnail, it's getting a second top here. So maybe we will get a bit of a pullback. I would be looking maybe at this area, 79.50, as a possible add if it gets back down and starts to make the bounce. But obviously the best spot for the buy would be at around 78.93. But you don't want to sit here, you know, you want the stock, and maybe the 5-minute candlestick isn't cooperating for you. Well, you know, that just means that maybe you're not going to get the best buy point. But it's giving you the opportunity when you look at the 5-minute to try and get the best buy point you can. So if you want the stock, sometimes you're just going to have to bite the bullet. If this one breaks out, I think that would be an opportunity to add it. But in general, you know, 5-minute candlestick, look for your best buy points, try and follow the PMO and the RSI and see what you can get. Right now, the RSI has been positive all day, which is why it tells me that even with the PMO turning down, there's not a great high likelihood we'll get back down to that buy point we want.
PMF.
Okay, the Treasury Bull 3 times share. Well, we were just talking about ways that you can play the inverse of bonds. This is, of course, on the bull side and leverage. This is not at all, just what I know about bonds and interest rates right now, this is not where I would want to be. You can see that support has maybe been reached here. But given the PMO, the RSI being negative, stochastics being below 20, I don't see this level as being the reversal point for bonds. And I would not want to be on a leveraged ETF on bonds here. I think even if we get the bounce on bonds, I think that it's going to be limited to this area of overhead resistance. So I'm not a fan here.
Okay, Costco.
Costco. All right, flag formation, trying to break out, big bearish engulfing candlestick Friday, which isn't coming to fruition with a down day, so that's a positive. PMO in decline on a sell signal. Certainly, if you're going to go with personal products, this is the stock to go with. It is definitely showing leadership against the group, and the group has not been doing well, but Costco has, so it's been able to stay in line with the S&P. I need to see this group doing better. I would expect consumer staples. I would expect healthcare. These are the areas I would be expecting on a pullback or a correction to start doing well, but they're not yet. So again, not a fan of adding. And normally if I were going to add, I would add in a defensive sector, but those sectors just aren't looking very good. Costco is trying to do that breakout though, so that looks pretty good, but this would be really early, I think, in a move. I think there's still a lot of downside potential here. It is holding the 20, but given these indicators, and they're not turning, that PMO is not decelerating. You've got a decelerating stochastics, but I don't see this as a buy. I think there's more work to be done. And if the market starts to pull back, this could still be a problem. Although I have to say it is performing well against the S&P. So there's that. But ultimately, I wouldn't be outing this one.
Okay, we've got a couple of questions I'd like to put in here. What is your opinion buying a stock at all-time high or making a new high? Is there a benchmark where it can go? My comment would be, it depends on the chart. It depends on what the market's doing. You know, momentum plays work out well if the market's in a bull market, strong bull market. I'll turn it to you, Erin.
Yeah. And I would say, you know, there is the adage, winners keep on winning, but you do need to know just some of the simple, you know, did they report strong earnings? I'm not a fundamentals person, but if they have strong earnings, and you can now get earnings information on stock charts using their symbol summary. So you just go up here and hit symbol summary, and we'll look at Costco just for an example. They now have earnings information, so they can tell you earnings and revenue. And, you know, if you have a stock that's making new highs and they've reported strong earnings before, there's a good chance that they're going to just keep on winning. But the market environment in general is always going to be a factor, as Carl said. And, you know, if the market's in a downturn, if we're sitting like we are now on the high likelihood of a pullback or a correction, probably not the time to add, even if it's going to new all-time highs. I mean, look at Apple. Apple was doing just fine, and then it reported poor earnings, and now it's, you know, tanking. So it could make new all-time highs as it continued higher, but ultimately earnings were a factor. And, you know, if you've reported strong earnings in the prior quarter, more than likely your next set of earnings will be good. And so winners can keep on winning.
Okay, one more question. What is the advantage of using full stochastics versus slow stochastics? I don't use stochastics, so that's
right. I only recently added them, and so I'm very familiar with how these work. I won't say that one indicator is better than another indicator. What's important is that when you're using that indicator, that you always use it and you learn how it works and how it acts. You know, you want to be as familiar as you can with the indicator you use. I think all indicators have their advantage. I just choose full stochastics. I don't think there's any, you know, detriment to using a different version of stochastics. I just use full stochastics. That's what I'm familiar with. So I wouldn't say that one's better than the other. It's just like the on-balance volume. There are various ways to measure volume patterns. I know the OBV, I understand the OBV, so that's why I use it.
Next symbol is F, Ford.
Ford, oh, okay. All right. Well, we saw Tesla looking really toppy. Not that these two are going to be completely in line with each other, but they are in the same group. And you can see that the industry group itself is losing relative strength against the S&P. So that's a big problem just out of the gate. Ford losing strength against the S&P. As far as the autos go, it's pretty much in line with the group. The group is doing pretty much what Ford's doing, which tells me I don't want to be in the group. We are hitting some support here for Ford, but the PMO just went into negative territory. Stochastics are oscillating below 20, which means there's a lot of internal weakness on this chart, a lot of price weakness. And the likelihood of it holding the 200-day EMA is not very high. Notice also we're about ready to get a dark cross of the 20 and 50-day EMAs. That gives it a bearish bias in the intermediate term. It's already got a bearish bias in the short term, just looking at price. I don't like Ford here. I think that you could even make a case for a short here down to this level of support, which would be about a 16% gain on a short. So I wouldn't be looking at this as a long. I would be looking at this as more of an opportunity to short. But I'd need to see the breakdown before I would short. I would want to see price drop below that 200-day EMA, close beneath the 200-day EMA. If that happens and these indicators still look as negative as they are, I think that wouldn't be a bad short.
ExxonMobil.
Oh my. Now you have an energy group that's just been moving up, up, up. And you have a stock within that group, that sector that's just moving sideways and no breakout yet. That would keep me out of XOM just for that reason. I think there are better choices. It's doing fairly well against the industry group. I mean, mostly in line, but starting to outperform it. I'd need a breakout here. I can't believe it hasn't had a breakout yet based on what's been going on with the sector. And that tells me that I don't really want this stock. I mean, energy is probably going to do well. Let's see, what is our upside potential here? About 5.6% to get to the next level of overhead resistance. I don't like XOM here, even though I know the energy looks good. This one just doesn't look good to me.
Amgen.
All right. Oh, nice PMO surge above the signal line. Really nice breakout here. It is a biotech. And like I said, I've been paying a little bit closer attention to biotechs of late. Oops, I just spilled water all over my desk.
And it was at the top of the Dow 30 that I reviewed earlier.
Yes. So it's showing some strength. It's getting ready to hit overhead resistance here where it probably will consolidate, maybe get this RSI out of overbought territory. But Amgen looking really strong right now. I can't complain about it except for the fact that overhead resistance is arriving. So if it does give you that breakout there, then you've really got a strong stock. And if it pulls back a little bit, I think that would offer you an opportunity to get into Amgen. This is a really positive chart. I like it. 5-minute candle. Price is moving higher. PMO is topped and is sideways moving lower. That's telling me there's actually a lot of internal strength here. Despite losing some of that momentum, price isn't really getting hurt at all. The RSI is staying overbought. I don't think you're going to get a better buy point today. It looks like it's just going to continue to head up higher. So, either you want it here or you don't, because I don't think that we're going to see much in the way of lower prices, possibly because we have that PMO sell signal. You could possibly see a downturn here, but the fact we haven't seen it yet tells me that you're probably not going to get a better price on it today.
BWA.
Big sharp decline, I'm guessing, on earnings. It's an auto parts. I did like auto parts back here in late June, early July. Didn't do much, and now we've got that big decline. Is this for a long, or it just was the symbol? I don't like it for a long. It is getting ready to hit some support here. This is the strongest level of support right across here. And that's a long way down. If we get the turn on the 200, I think you could potentially see some upside on it. But based on that PMO, just, sitting lower like that, not good, not good.
Right. It looks like it might be an earnings issue. That's, that down draft.
Forgive me. I'm looking, I spilled water. It's dripping all the way down the back of the desk and I can hear it dripping. Okay. Well, I know where I'm going to be headed, which is to a towel as soon as we're done.
Okay. TEAM.
TEAM. Atlassian. Okay. I'm probably pronouncing that wrong. Nice breakout, pull back to support. So that's actually a pretty good look. It is island-ish, so we could end up with a gap down and a move lower. It is a pretty big decline. And notice that you got that big push to the upside, but it closed way down here, which is why you had that bearish filled black candle. And then everybody started to, I think, get nervous, wanted to take some of those profits. And now we've got another day with a bearish red filled black candle. I don't like the way the momentum's going on this one, just when I look at it visually, obviously the PMO is still moving upward, but that was a really big move to the upside. Stochastics do look like they're turning back up. You know, if it had held above this area of, you know, new support, if you will, or prior resistance, I'd have probably felt a little better about it. But I have a feeling we're going to see some more downside on this one before we see a reversal. And it is sitting in the technology sector, which is going to feel a lot of downside pressure. It already is. So I'm not really a fan of going in on this one. If you owned it, I might be taking some profits here just because I think it's going to head down and start testing these lows again. I think that was the opportunity, and money started selling it as soon as it got to that very overbought level. And now it looks like it's coming back down to equilibrium.
Okay, DKS.
Nice rising relative strength here. I like that. PMO is rising, RSI is positive, stochastic is above 80. All the technicals are doing what we want. So what's up with price? Well, it's been mostly range bound, but it's making a kind of a nice little move here. We've got upside potential really up until overhead resistance is about 3.5% away. So there is that potential of some consolidation coming up, but that would probably offer you a nice little entry. Technically, this one looks good. There's not much that I can complain about it. 5-minute chart. You're at the buy point. We had the PMO crossover and we have a positive RSI. So you're not going to get much better buy point today. And there's a lot of upside potential just on the day by getting this buy point, at least almost 1% upside possibilities here on this buy point. So really nice buy point there. I'm going to look at the weekly just since this is one of the few I've been positive on. PMO turning up on the weekly chart. Like I said, this is going to be the big problem, is breaking out to new all-time highs when the broader market is likely to be in decline. But it's doing all right today. It did great last week. I think there's some pretty good potential.
Okay, Goldman Sachs.
In the financial space. So investment services, if you recall, we went through all of those industry groups. Investment services was not one of the, you know, shining examples of bullishness in the financial sector. But looking at relative strength, it's, you know, it's performing a little better than the SPY right now. You can see the rising trend. And as far as Goldman, it travels in line with the group itself. So it's pretty much performing in line with the S&P. That's a little concerning because I'm not bullish on the S&P. And so I want something to be outperforming the S&P if possible. So relative strength, not so great. But this does look like a flag formation. We're trying to get a breakout, but notice we've got a filled black candlestick, which is a bearish candlestick formation today. So I don't trust this as a breakout there. I mean, you could still say it hasn't quite broken out. The PMO is toppy. RSI is positive though. Stochastics now below 80. This seems like kind of an iffy one to me. What's the upside potential if it can get a rally going? It's about 5.5 to 7.5%. So not bad on the upside potential side. I like it okay. I think if I owned it, I would hold it because it does look like it's getting ready to make a move. Like I said, I'm not adding anything right now, but I could see it as a possible add. Double bottom on the 5-minute candlestick chart. We don't have the PMO. Yeah, it looks like it is starting to rise. RSI negative. So you're kind of at an aggressive buy point. I would say I want to get a little bit more conservative with my buy point and wait for a breakout, because you can see between gap resistance, this low, this high, you want to see that double bottom execute and get above that confirmation line, the price. So I think a little bit more to ride it out, or you go ahead in a little aggressively.
IONQ.
big decline going on here. Now I've got people coming to my door. So we're going to get some barking. It's just one of those things. Big decline here, not liking that waterfall move. I wouldn't want to own this one anymore. It's lost the 20-day EMA. Certainly not something I'd be looking at for a reversal candidate. Relative strength is failing here. So I'm not a fan. And we're at about 4 minutes too. So I might go ahead and do one more symbol request. And then I want to take people on a visit to our website.
Okay. Here's a question. I have a long option call on Oxy until January 2024. What do you think?
All right. Okay. I don't trade options, so I'm not giving you any, I won't be able to give you any insight on that. But I can tell you the technicals of the chart. We have a nice basing pattern here. PMO surging above the signal line. The short term looks pretty good here for Oxy. We go to a weekly chart. You can see that double bottom looks like it's forming. And again, that's sort of that cup shape that we're getting. PMO on a weekly buy signal. I think you're going to be okay. The long term looks, fairly bullish. But your, overhead resistance here at this top back here in 2022, I think that you could get up there, and that's a 20% gain. So doesn't look too bad. All right, I'm going to take everybody over to our website really quickly and let you know that you can get a free trial to our reports. We have the DP Alert and DP Diamonds. DP Alert's going to give you pretty much what Carl did at the beginning of a program. So you'll get a pretty good assessment of what's going on in the market in general. DecisionPoint Diamonds, this is where I give you my stock and ETF picks for the week. On Wednesdays, it is ETF day, so you're always going to get 3 ETFs per week. And we welcome you to come and try us out. Like I said, a free 2-week trial. All you need to do is use the coupon code DP Trial with the number 2. So DP Trial 2 is your coupon code. Come check us out and see why we have so many subscribers and who love us. We have sticky subscribers. They like to stick around once they get a taste of our reporting. All right, I think that's going to close it out for us today. And I appreciate your attention and time with us here in the DecisionPoint Trading Room. We'll wish you both. We will wish all of you good luck and good trading. And we'll see you next week on Monday for the next DecisionPoint Trading Room. For subscribers on Friday, the DecisionPoint Diamond subscribers, we will have our Friday trading room as well. So bring those symbols and we'll see you then. Good luck, good trading.